Welcome back. Well, so much to unpack from the IMF World Bank annual meetings with recommendations on managing global debts, growth and balancing, both to manage risk ahead. Well, joining us to analyze is Mr. Farouk Khailan, is the CEO Premium Africa Holdings. It's great to have you on the show. Good morning.
Good morning, Ladi. How are you doing?
I'm great, thank you. So first of all, let me get your key takeaways from this year's annual meeting.
It's been 80 years since the IMF was established, 1944. We haven't seen major shift in terms of significant impact, particularly on Africa. It's always been an institution that our leaders run to when there seems to be some economic distress. Some have called it a lazy approach. But in the nutshell, meeting happened. It was very important that it happened. There was a lot of stock taken. You realize that key components of this year's discussions were global economic resilience, debt management, and then climate finance. The issue of surcharge policy by the IMF was also very well, trumpeted at the meetings. There was, stakeholders, including myself, advocates who say that if these surcharge fees, which are the additional fees that is, placed on economies with high debt, if it could be remodified or, to boldly even eliminate, it will create a situation where IMF's lending is less, pro-cyclical, and then also be more supportive in economic downtimes. There were those who also came, to talk about debt relief, the usual suspects being Africa, and also it was important that conversations were aligned. If you also look at the narrative, there was also the need for some sort of, alignment between the currently important conversations around climate and then sustainable, debt mechanisms. So it was a good meeting in a nutshell. I see that the World Bank leader is speaking the language that we've always been speaking. Let's diversify our economies. Let's look at agriculture. And I think after this meeting, we will see some shift in policy. Reforms will be very, prominent across the region. But we also need to monitor closely if indeed these call for reforms are being adhered to.
Right, and there was also talk about, most of the oil exporting countries, in sub-Saharan Africa with growth not matching, all of that oil production and exports, mostly in sub-Saharan Africa. So what kind of policies do you think, need to be put at the forefront at this point, so that we can see some kind of regional economic growth and maybe find new sources of growth for most of these countries in sub-Saharan Africa?
Yes, I think to address these complexities of uneven, economic growth, it hinges on a few, points that needs to be addressed. It's very important that we shift towards, shift away from oil dependence by investing in sectors such as agriculture. Like I earlier said, the World Bank, leader was very emphatic on that. We should look at manufacturing. Technology is here to allow us to create more, balanced growth across the region. It's also important that we look at enhancing our revenue management, implementing very transparent policies, sovereign wealth funds, to manage oil revenues effectively, reducing fiscal vulnerabilities, and also it's important to ensure that equitable regional development so that we all grow together at a certain appreciable scale. Infrastructure development cannot be taken out when we're looking at, presenting solutions, investing in very critical infrastructure, including transportation, power, digital network. We should also look at how to support non-oil sectors. And we also connect remote regions to economic hubs. A lot of times when we are making these decisions, there's a disconnect between, rural areas and then the major economic hubs. There's a very important conversation that needs to be had to ensure that it's significantly connected. Governance and anti-corruption measures is also very key. We need to strengthen institutions. Africa has been, had an authority for strengthening individuals rather than institutions. We need to strengthen these institutions to be able to combat corruption, because corruption always takes us back, to ensure that oil revenue benefits reach local communities. That's regional, ensuring that reducing regional disparity and fostering inclusive development. It's very important. So these are some of the solutions that I think we should be able to adapt as early as possible, because like you mentioned, there seems to be some unevenness across board in terms of how we are developing as a continent. Oil, the time for oils for our development is becoming more limited, and the transition is happening, and it's happening very fast. It's important that we sit well to be able to, not to miss out on the bounce of the ball.
And we also had the economic managers from, Nigeria and, some other African countries, and they had to have, conversations, with investors that were present at the meeting. In your view, do you think, investors are comfortable, at this time to say, you know what, all right, let's pile in some of these funds into a country, say like Nigeria, and how should Nigeria position, for that, going forward? Because we keep talking about attracting and growing our FDI, at this point.
Well, one very, very key component of attracting investment is currency stability. A couple of weeks ago, we were having a conversation, particularly about Nigeria. It would interest you to know that in the corridors that I'm operating, Nigeria comes up a lot strongly because it has numbers, it has a massive youth population. So it appeals to investors and is always on the dashboard in terms of the next, opportunity to address. But every time some sort of research is done, instability in currency, it becomes a concern. So as advisors to some of these, high net worth individuals and investors, we always say that, look, we are monitoring government to adapt exchange rate policies that reduces volatility and provide a more stable environment for foreign investment. Helping stabilizing inflation and boosting investor confidence is very critical. So I would always place it at, exchange rate stabilization is very critical, and that cannot be avoided. Every investor is looking at, this very key, elements of economies to be able to make decisions to ensure that their investments are safe. And in a case where technically you cannot rule that out, definitely there was going to be some amount of capital flight, and exchange rates play a key role in that. So I think that we should look at the exchange rate conversations keenly. I'm monitoring, I'm seeing that, yes, the central bank is making very bold decisions. It's not resonating well with the citizens, but let's look at the long-term effect of those decisions, and then I'm sure we will be able to have a conversation around the outcomes.
Right, and we get most of these recommendations. Most of the time, it's really painful, especially for the citizens. And, looking at this whole, currency stability issue, is it time to just full on peg the naira, at this point so that, everyone just feels comfortable? What do you think?
Yes. I mean, those who have said that, look, we need to be very bold. We need to grab the bull by the horn and make these decisions. I'm not going to move away too far away from that. I think it's important if it's pegged. And one thing I also want to appreciate that we should be very inventive. We should be bold. At this point, some people have raised their hands in despair, lost, and has been thrown in. Why don't we also adapt certain bold policies? It might not be popular, but trust me, in the culture of being proactive, a sense of urgency. If you look at what is happening, I never stop talking about Middle East. It's an economy strategy that goes to say, let's do this, let's try this. We've got nothing to lose. Worst case scenario, we go back to what we already know, or even in the process of being inventive, we're going to learn. So I'm not going to rule that out at all. But then it needs to come with a lot of education, a lot of collective stakeholder engagement. That decisions should be made across board. Every individual or institution that is directly involved in currency conversations, currency management, fiscal policy, monetary policy, should be involved to make that decision. And I'm sure that the outcome will be inspiring. If not, we're going to learn from it and go back to the drawing board and make certain decisions again.
This shift towards, green energy, and definitely it will impact African oil producers. Is the best time yesterday, for these countries to start fully, exploring, we've been talking about the great transition, at this point. Should they start channeling all of those funds into that now?
It is, this is what we've always been talking about, that sense of urgency of Africa. We sat down for transition to hit us. We had so much oil, we had to make good use of it, use this oil to develop our economies. We were still pacing, we weren't too serious about it. It was business as usual. Look at what has happened to the Middle East. Middle East has used oil to develop its economy significantly and even moved away from oil reliance long time ago, moved into tourism, moved into agriculture, moved into other sectors of the economy, and are already miles ahead of us. Now transition is here. We didn't maximize on what oil was supposed to do for us. And even when it comes to the transition, same culture of, snail pacing, business as usual. Documents are sitting at policy framers' office, is not leaving. Somebody has to sign, he has traveled to a funeral. It's a major concern. Now the transition is here. We don't also want to miss out on this opportunity. Whether we like it or not, the transition is happening. Let's see some investment in solar. Let's go hard in solar, wind energy, hydropower could offset revenue loss from oil, whilst leveraging Africa's rich natural resources. We have the natural resource when it comes to renewable energy. Impeccable amounts of it. But like I said, the earlier we make good use of it, the better for us.
Right.
That sense of urgency should be now. It should be now, laddie. We cannot wait anymore.
Right.
Natural gas as a transition fuel should also be used to, to bridge the gap. Because as the transition is happening, a lot of African countries have significant gas reserves that can, can serve as a bridge fuel during the energy transition. Using that to support both regional energy demand and export opportunities as well.
All right, we already see Nigeria relying heavily on gas for this transition process. But it's always great having your perspective. Thank you so much for coming on, Mr. Farouk Kailan, CEO, Premium Africa Holdings. Thank you so much.
Thank you. Thank you very much, Laddie. Always a pleasure.
All right, let's get a quick check on how the markets played out last week. 1.41%, that's for the all-share index. Closing the week, 99,448 points. The markets are open now. We'll see if this bullish trend continues. We'll see the market cap, a massive 60 trillion now. That's for the market cap. Let's look at activity for the week. We see volumes up about 2.14 billion units. That was traded last week. You see investor appetite was really strong last week, 85 billion. That was the value deals, 41,217, all in the green. Let's look at the top sectors now. See banking led the pack last week, 7.86%. Consumer goods was the only one in the red, 0.84% down. Then we also see insurance, that's also in financial services, also up by 4.04%. Oil and gas, 3.95%. So markets are open now. We'll see if investors, continue in this last trading week of October from the bullish sentiment and maybe across above the 100,000 for the all-share index. Markets are open now. We'll give you an update at 1 p.m. on how trading is going locally and most of the global markets we track. I'm Laddie Williams. That's it from me on Business Morning. I hand things back over to the Sunrise Daily team.